Good morning. This is Larry Edelson with my Uncommon Wisdom video market update for Thursday, December 9th. We're seeing quite a bit of volatility in the markets this week in everything from commodities to stocks to bonds. And that's not really surprising to me given the fact that many of the short-term cycles are in a shifting mode right now, and some of the intermediate term cycles as well. Also, we've seen substantial rallies over the past couple of months in many of these markets. So a pullback is overdue, and I have been indicating that to you in the last week or so, especially with respect to gold and silver and the commodities in general. And I do believe that we are on the cusp of that pullback right now. So I want to go right to the gold chart, which I'm calling up here. This is the chart, again, that I showed you last week, and I did show you how gold had broken down this, broken below this uptrend channel here, indicating that a test of support was underway. So far, the pullback, we saw new closing highs in gold on Monday, but so far the pullback in gold has been very, very shallow, and I do believe it's going to become more severe in the days and weeks ahead. I am looking for a minimum, a test at a minimum of the 1316 to 132500 level in gold, and far more likely we will probably see a test down to around $1,250 per ounce over the next few weeks, going into possibly extending into early January of 2011. This is the main support here. And quite frankly, a pullback to test support now would be more bullish than bearish for the intermediate and longer term. What I do not want to see right now is gold try to run away to the upside. That would be more indicative of a bubble, and I don't want to see that happen. So if you're a true long-term gold investor and you believe, based on all the fundamentals and technicals, that gold is heading much, much higher over the next few years, what you want to see right now is a healthy pullback and test of support. Pretty much the same thing in silver. I do not have a current chart ready for you, but in silver the pullback that should occur can be very, very sharp. We could easily see silver fall quite substantially down to $25 an ounce at first, and then even as low as $22 per ounce. And that is what is actually required right now for silver to prove itself on a longer term basis. If we do see a good test, a sharp test of support in silver down around 22, that will confirm to me that over the next 3 to 5 years, silver is going to go much, much higher than even $50 per ounce. But if silver does not do that, I will not be happy. I will not be happy about the prospects for silver going forward. That's not to say it won't go a little bit higher, but it will indicate that silver might only trade between, let's say, $20 and $32 an ounce for the next few years. A wide trading range, but not nearly what the potential that gold has. Now, I want to go right to the dollar index as well. The dollar, we saw a pullback from the middle point of this white space here where I told you there was some system resistance that I had. The dollar index was trying to find support around the 79 level. I wouldn't be surprised to see one more leg up in the dollar index up to around 82, 83, possibly higher to 86. That would probably occur with a continued breakdown of the European crisis and the sovereign debt crisis, which I maintain will be contagious and will hit the United States sometime next year. Let's also take a look now at the Dow Industrials. You can see the Dow is forming another rectangular type of formation here, very similar to what we saw in this blue box previously and back here in October as well. These are indications that longer term the market wants to go higher and will go higher in the industrials. However, as with gold and silver, the cycles are very synchronized right now. So I'm not expecting the Dow to rally much more right here. First, we need a pullback to test support. And very importantly, although it's still about 3 weeks away, we will need to see how the Dow closes out the year. That will give me various system signals for how it will perform going into next year and throughout next year. I have published some of those lines in the sand, those signals, if you will, in my Uncommon Wisdom column over the last couple of weeks. And basically, we cannot rule out a Dow decline to 9,000 yet. It could occur over the next few weeks, or more likely the early part of 2011. But what happens immediately before that decline unfolds, and more importantly after that decline unfolds, or a test of support, let's call it, will be determined by how the Dow closes the end of the year, the last trading of the year, day of the year on December 31st. I know it sounds kind of hokey that one can make some forecasts for 2011 based on how a market closes on the final trading day of the year, but I've been doing that successfully since the mid-1980s, and a year's worth of price action in a market is really just another bar on the chart when looked at from a yearly chart point of view. And it does carry very significant details for how the market is positioned going into the next bar on a yearly chart, which would be 2011. Having said that, till next week, this is Larry. Please stay long your core positions in gold. This is not the time to get shaken out. If we do get a decline to 1250, I will be a very aggressive buyer of gold, silver, and many other mining and natural resource stocks. Again, till next week, this is Larry. Have a good weekend.